Hello traders, welcome to the daily market review. This is David. We're going to be looking at Euro US dollar for tonight. London session is about to open up. So let's get started. So what we noticed was for the past, since August, right about August 5th, there was a peak formation high known as the M formation. We found that based off the W formation and the smaller consolidation on the first day, and the second day we noticed another consolidation and the peak formation high and low. This peak formation doesn't really have a divergence here, but on a smaller time frame, you can do see the M formation. And then followed by that, what we noticed, there was a price correction, and that was the wave one. And then after that, we noticed a level one consolidation, the first phase of the market when the market starts to consolidate. So we noticed that consolidation happen, the wicks to the top, wicks to the bottom, but it kind of raged in the sideways movement. And then we noticed the second wave that came along right away, right over here, where we can notice the whole wave came through. It started right over here, basically. It started right over there, ended over here. Actually, it ended over here, consolidated for a little bit, and then it created the peak formation low. It had the nice divergence also. So we anticipated on going long, but then when there was we made some profit over here on this move, but we booked partials and we were aiming for the take profit over here. However, there was a market reset. There was more sellers in the market, and it pushed the price lower. But eventually, if you look at a bigger picture, it was a much more bigger consolidation. So it created a level two. And then we noticed a breakout and then a peak formation low. And the peak formation low had a 3 days, 1, 2, and 3. So 3 days, it was continuing doing a stop hunt. So second day, it did the stop hunt here. And the third day, it did the minor stop hunt. And it was a bring straight setup. So there was an Asian session when it ranged, and then London session pushed the price lower, and then did the first leg and the second leg doing New York. So the first leg of a W was created at London session, and then the second leg was created around 5 a.m. You can see that on the timeline at the very bottom. Okay, so this is where the entry should have been if you are a market maker trader. So because you've seen the whole scenario, what was happening. And basically we did enter in the market. We booked our profit over here. And we did anticipate it in the correction because this move was quite bigger, about 100 pip move, 143 pip. And that's what happens whenever there's a 3-day or a 4-day continuation stop hunts, because it collects so much volume that when it bursts through, it goes about 100 to 150 pips, 200, 300 pips in a single move. But also remember, there's going to be a correction because it needs to grab money from the retail in order to push the price higher. So the consolidation begins. So it started over here. You can see it's kind of started to exhaust itself on the 4th September. Consolidated lower, went up, came back down, and did the same where it started. And then on the second day, you can see the price kind of went low. Open and close is very lower, okay? So, and then open and close a little bit higher, and then open and close a little bit lower. And then final, lower and low. So basically you can see each day the market is pushing lower and lower. And finally it consolidated so long and collected so much volume, all the retail trader expecting to go up, it does the stop hunt low. The retail traders, they start selling here. They start selling on the retest of that bullish flag. Now it's a bearish flag for some reason, right? Because it broke lower. So retail traders are selling here. What happened? If they have a take profit here, that's good. But guess what? It didn't touch their take profit. Majority of the time, you might book your profit quick, but the projection is not right because this one is a stop hunt, low and rise, because the overall trend is up, not down. But this is just a distraction for you to short, but the overall projection of the market is up. So as you can see, the market basically created the stop hunt. The first day it tested the low, and the second day it came back again, but failed to break the low. So what does that shows? It shows we have a divergence. Divergence means there is buyers in the market. There's market makers are willing to buy. Here, there's market makers willing to buy. Okay, so here you can see there's change of hands going on. Here you can see all that same thing going on, but on a bigger time frame. Multi-session, this is a multi-session also. So pretty much they did the stop hunt of, let me see how big of a stop hunt it was. It was about 58 pip stop hunt due to news. Normally it doesn't do that. But whenever we buy on a level 1, we always make sure to put our stop loss below the low of the previous structure in order to avoid the stop hunts. Okay, that's only applied with the level 1, not with W. Okay, so there's many other rules that we need to follow in order to get this trade perfect. But however, like I explained in the last video, we were expecting the stop hunt, and we did expected it, and it did happen. And what we're expecting now is more push to the high, because we don't see a divergence here at all. So there is still buyers in the market, so there is going to be a push, and at the same time it is a bullish flag. It is a bullish wedge, bullish flag, bullish wedge, and you can anticipate in a buying trend, but make sure this is, make sure the stop loss is all the way at the bottom. But that's not going to give you a better risk reward. So whenever you trade, it's always about how good of a risk reward do you have. Here is a 1-to-1. It's not a good risk reward. That's the whole scenario. When you're trading, you need to have a good risk reward, 1-to-3. Like here, this is our take profit zone. So basically level 2 should be formed over here. And then peak formation should be here. So we'll see how this plays out. But overall, we are in profit about 125 pips, up in profit from our entry, 124 pips, give or take. So we'll see how this will play out. But the overall projection for the euro, it's going to be up. But as long the price stays above the stop hunt low. So as long the price stays above the 109 towards our entry level, we're good to go. But at the same time, we're going to be moving our stop loss to break even. As a trader, we need to secure our trades by moving our stop loss to break even. But however, if the price does come back down, it's only creating a bigger structure. So there's going to be a bigger move. So we can take a much more, another entry if the price comes down. But it's unlikely because the price is already grabbed, and then all the volume has been grabbed. So most likely the price not going to come back, but we'll see if anything can happen. You might expect here a breakout to the low and a stop hunt low and rise, just the way how you expected here. So there could be many scenarios in the market, but there's only one projection. It's bullish or bearish. That's it. So as long as you can figure that out, then it's much more easier for you to know when to enter, when to exit. All right, guys, that's it for tonight. I'll catch you guys next time.